Hello and welcome to your real estate journey, expert tips for buyers and sellers. I'm Dolly Lopez, your realtor and broker in the state of Florida and Kentucky. And today I am joined by one of my personal favorite CPAs, Chase. Welcome. How are you doing today?
I'm great, Dolly. How are you?
I'm doing well. And today I'm very excited about this topic, which is audit. I always have questions about audits, and it's so scary just to know about, the IRS is going to audit my tax
Right,
return, my books, and it's really intimidating. And I'm not a person who gets intimidated very easily.
yep,
So I'm really, really excited about this topic in particular. And I had a couple of questions to ask. So let's start. Is it
sure.
really true the IRS is hiring a bunch of new agents? And how is that going to affect us? I mean, if it's true.
Yeah, I get this question a lot. It is true. The IRS is on a hiring frenzy. There's many numbers that have been kind of tossed around. I think 80,000 was the last number that I'd heard. Uh, but keep in mind, this is over a long period of time. A lot of these will be new agents and new positions, but a lot of these are also replacing ones that are already on retirement or already transferring out to different divisions. So that number really shouldn't be of a huge concern. Um, but it does mean that they are ramping up audits in certain areas. Uh, but for the most general taxpayer that we deal with, there shouldn't be a big issue. There, basically anyone under like the $400,000 gross or adjusted gross income level, those audits are at an all-time low. And the IRS says that we're going to leave those guys alone. We're after the big fish. We want, the $250 million companies, the big complex corporations and partnerships. They want the people who are doing some really shady stuff. They're going to look into that a little deeper, but maybe not shady. But
But
for the average taxpayer, audit levels are about normal, and they expect that to stay the same.
perfect. Okay, so that kind of brings me to the next question. What type of tax returns is more likely to raise a flag for an IRS audit?
Yeah, good question. Um, Kind of the most common type of audit that we see is what we call a correspondence audit, which is basically you go to the mailbox, open it up, and bam, there's a letter from the IRS, and your heart starts
Guilty of that.
pounding.
It had
Yeah,
happened.
it happens. And you open it up and you just send it to your accountant or your tax person or whoever. Um, and basically, usually what brings those about are you may have missed something. Maybe you forgot that you had that IRA distribution, or maybe you forgot about that 1099 from TD Ameritrade when they switched to Schwab, or usually it's like an omission of information. And it's not that you've done anything wrong. It's just simply that, hey, you didn't report all of your income. So we think that you might owe us some more money. And sometimes that's true. And sometimes, they owe you more money. That's pretty common. And that's more of just kind of like, let's reconcile this type situation. The next kind of most common correspondence audit that we see is, hey, we feel like some of these expenses don't really match your industry and the amount of income that you have. Sometimes that's true, sometimes it's not. And in that case, you'd want to make sure that you have accurate books and records, making sure that you have someone helping you with your tax preparation that's reputable, that knows the laws and the regulations, and is not getting you into a bad spot.
Good. So you mentioned correspondence tax audits. So how
Mhm.
many types of audits are there?
Uh, it kind of depends on your question. So typically, you kind of have your correspondence audits, which is basically done via mail. Sometimes you'll talk to a revenue agent or um, your CPA or enrolled agent or accountant with power of attorney can take care of that for you. Other times, you can actually just get a summons, to an appointment with an IRS agent, which would basically be a lot of in-person stuff, either at their office or at your place of business. Those are becoming a little bit more rare, unless it's a big case. Uh, but for most taxpayers, it's going to be an income audit. If you have a business, you could have a payroll tax audit. If there's any issues with depositing employee withheld payroll taxes, we see that a lot. Where maybe you didn't pay the proper amount, or some taxpayers didn't pay them at all, things like that. But most often it's going to be an income audit where they're just looking at your personal income and expenses, or if you have an S corporation or partnership, they may look at that to make sure that your income and expenses are correct as well.
Okay. So how can we prevent an IRS audit if that's a thing? Can, can people prevent this type of audits, and how can you do that?
Yeah, so the best way to prevent it is just to make sure that you have a true and correct tax return to begin with. Um, Even still, depending on the industry and the income and expenses you have, you may have a legitimate 100% true and correct tax return, but all of this information gets fed into the IRS computers. And there's algorithms that check the tax returns. And if it's outside of a certain parameter, you may just get an automatic notice. It's not saying that somebody's sitting behind the computer reading every tax return saying, yeah, this one looks like it's bad. You may just have a mathematical, error that, or maybe just have a tax return that exceeds those algorithms and the parameters, and you just get flagged. Which means you kind of go through this audit process, and if everything is true and correct, you just get a stamp of approval, say thank you very much, we appreciate you, being in compliance, and move on.
Okay. So let's say that we received one of those letters, which I did, and I'm so glad you were there to help me through through the audit, because it was really intense. At least that's what I felt like. But everything came out good, so I was really happy. Now, what can people expect during an IRS audit? How long does it take? What should they expect?
Yeah. Um, Again, it all kind of depends. If you get one of these correspondence audits that just says, hey, we'd like to double check these items. As long as you have that substantiation, you have all of your receipts, you have all of your bank statements, it matches the tax return, all of those expenses are true and correct, ordinary and necessary. It might take, 2-3 weeks. It could take a few months. Depends on how many cases that revenue agent has. I've had conversations with agents that have 300 and 400 cases going at once. So it could take 6 months or 12 months for something simple. Just kind of depends. Uh, if you get into a situation where maybe you have a tax return that was not true and correct, they may start opening up more areas to look at and expanding that audit to other categories or other credits, or deductions, and that could prolong the audit time frame. Our job, however, as tax resolution experts and tax repairs, is to try to keep that scope extremely small and get in and out as quickly and as efficiently as possible. Which is why you really shouldn't ever do an audit by yourself. You always want that person that knows what the taxpayer rights are, has dealt with revenue agents, has been around the block, so to speak, and can kind of help guide you through it and keep that revenue agent on track so as we don't expand this audit and cause any other issues that may be out there.
Chase, I remember that my audit was from 2018, and
Hmm.
and they asked me for a list. I sent it to you. You basically took care of everything. You told me, hey, I need you to bring me this, and this. And I don't remember they expanding, like asking for more items. I think it was just exactly
Yep.
what they asked for. It was sent. That's it.
And that's
Nothing.
because you had good books and records, you had
Yep.
your receipts, you had everything in order like you're supposed to. So we were able to gather all that, get that to them in a nice organized fashion, say, look, here's what you're requesting. It's all true. It's correct. It's ordinary necessary for the business. There's nothing crazy going on here. And it did take a little while. Of course, this was coming out of COVID years, so they were behind a little bit anyway. But it did take a little while, but it ended up being very favorable because you were prepared. You had that information.
And that brings me my next question. How can people prepare? I mean, not only prepare, but yeah, how can people prepare for a tax audit? Because it's really difficult to find a receipt that the ink kind of shades away after a
Yep.
while. Like, what would be the good methods to follow to prepare for an actual audit? I mean, we're going to
Yep.
try to prevent it, but now since
Right.
already in
It's
it.
here.
Exactly. What do you recommend people to do? How can they
Yeah.
prepare?
Fortunately, we're at a day and age where a lot of people are doing a lot of purchasing and things, over the internet. Amazon keeps a shopping history that goes back decades. A lot of your vendors probably have online portals. So it's getting a little easier to go back and retrieve those records, but it really is up to the taxpayer to keep those receipts for every transaction that happens throughout the year. Um, Especially for our small businesses, that can be difficult because there's a lot of mom and pops out there, that are running around town. They're paying cash for stuff. They're getting receipts or they're not getting receipts. Those are the ones you really need to kind of just change your ways and make sure that you're getting proof of all of your expenses. And basically, that needs to cover the who, what, where, when, why. Who did I buy it from? What's it for? Is it ordinary, necessary? How much was it? When was it? Um, Sometimes it's as easy as keeping an envelope in your car or truck. And when you get that receipt, drop it in there and then just keep it in your files. Give it to your accountant that's doing, or your bookkeeper that's helping with, gathering your information. Um, Absent of that, you run the risk of the IRS disallowing those expenses, even though they may be valid. Uh, there are some ways around that in some cases, but the foolproof way is keep your books and records clean and straight and just keep copies of stuff, really. And they can be electronic. A lot of people are scanning stuff in, they're taking pictures on their phone. You don't necessarily have to have that little printer receipt, from the store, like you said, that'll fade away. You can scan it in, save it in your Google Drive or whatever. But an electronic record would be fine as well.
Good. Chase, thank you so much. I really appreciate you sharing this your time with us and with our viewers.
Happy to.
Guys, remember we're here to assist you. If you have any CPA needs at all, I know Chase will be more than happy to help. And I know he covers, he's based off Kentucky, but I know he covers a lot more beyond Kentucky. So
Yep.
you can definitely give him a call. And I'm here to help. So make sure to subscribe to our YouTube channel. We are also on Instagram, TikTok, Facebook channel. So you name it, we are there. Once again, thank you for tuning in to your real estate journey, expert tips for buyers and sellers. And I'll see you guys next week. Bye bye.
Thanks, Dolly.